Welcome to the Deep Dive. Today, we're really getting into the Indian IT sector's Q1 FY26 performance. We've looked at a lot of data to understand, where things stand, the hurdles they're facing, and what's coming next, especially with, the global economy being a bit shaky and clients tightening their belts.
Yeah, and it's crucial to remember the scale here. This isn't just any sector. It's a global powerhouse, contributes, 7.3% of India's GDP, and projections show it hitting maybe $300 billion by FY26. Plus, it employs nearly 6 million people. It's the top IT outsourcing hub.
Okay, so let's unpack this Q1 then, because the data, it really suggests a mixed bag, right? Growth seems modest, single digits for the big players. Wipro's at more 0.8% year-on-year, HCLTech around 8.1%. What's driving that kind of caution?
Well, it's interesting. There's this pervasive lag effect happening. So companies like Wipro, you mentioned, they're reporting huge deal pipelines, over $5 billion in bookings for them. But turning those bookings into actual revenue, that's slow going. Clients are just much more cautious. We're seeing project deferrals. And on top of that, margins are getting squeezed. You've got wage hikes, higher operational costs, and clients. They're pushing hard on cost optimization, consolidating vendors. So those big booking numbers, they don't hit the bottom line immediately.
Right, that makes sense. So the pipeline's full, but the tap isn't fully open yet, so to speak. And shifting gears a bit, another huge factor shaping things is AI, right? Artificial intelligence. The potential impact is massive. Some projections say AI, Gen AI specifically, could add, $450, $500 billion to India's GDP by 2025. How's that actually playing out as a growth driver for IT right now?
Yeah, the potential is definitely there. But the key shift, is about results. Companies are investing heavily. Look at HCLTech. Their profit dip was partly due to Gen AI investments. But clients aren't just exploring anymore. They want clear, measurable ROI from these AI projects. They need to see tangible business outcomes now.
Okay, so proof of concept is moving to proof of value.
Exactly. And connecting this to the bigger picture, don't forget the domestic market in India. It's actually growing faster than exports, around 7%, hitting $58 billion. That provides a really vital buffer against global ups and downs, driven by small businesses going digital, MSMEs, and government pushes too.
That's a great point about the domestic buffer. So with all this context, the lag, the AI-focused domestic strength, how are the big players adapting? What specific strategies are you seeing?
Well, look at TCS, Tata Consultancy Services. They took a proactive step, reduced their workforce by about 12,000 globally. But, and this is key, they simultaneously poured resources into AI training. Over 114,000 employees trained. That signals a real shift towards becoming, a future-ready organization.
Right, reshaping the workforce.
Then you have Infosys. They've clearly pivoted to enterprise AI. They've deployed over 300 enterprise AI agents already, and they're showing real productivity gains, 5% to 15%. So that's AI delivering tangible results like we talked about. And then there's Tech Mahindra. They posted a really impressive 34% jump in net profit year on year, which shows that even if revenue growth is modest, strong operational discipline, tight cost control can still drive serious profitability.
So different paths, but all focused on navigating the current climate and preparing for the future. Okay, looking ahead then. What are the main challenges that persist? I imagine the skills gap is still a factor.
Oh, absolutely. The skill gap in these new emerging technologies is a constant challenge, and competition for talent is fierce, especially with global capability centers, the GCCs, also hiring aggressively.
Right.
But the opportunities are still huge. High-value digital transformation work, cybersecurity is massive, and we do expect a rebound in hiring, actually. More fresher hiring is projected for 2025. Fundamentally, the demand for IT services isn't disappearing. There's so much tech debt out there globally companies need to modernize.
So summing it up for you listening, the Indian IT sector isn't just, hunkering down. It's showing real resilience. It feels more like a strategic recalibration finding its footing for the next wave.
Exactly. It's all about delivering that tangible value now, fostering innovation, yes, but also building that future-ready workforce. The underlying demand, as I said, remains strong.
So here's something to think about. As the sector really doubles down on AI, how do these companies strike the right balance? Balancing that immediate need for measurable ROI from AI with the deeper long-term investments needed for truly groundbreaking innovation. Getting that balance right, that's probably going to define the next chapter for Indian IT.
If you like the content, please like and subscribe. Comment on Finance Seco India.